All right, this is video 2 in our beginner's guide to properly structured whole life insurance. The last video, we talked about the overview, giving your dollars more than one job, what it's like to have a multi-dimensional asset, and that concept should compound every video you watch. This next video, we're going to be talking about the concept of overfunding, and we're not going to get into numbers in this video, but we're just going to conceptualize what it means to max fund, what it means to fully fund, what it means, what some people call overfund. And so hopefully by the end of this video, you understand why someone would want to overpay in trying to get an optimally designed policy. Okay, so we talked about the overview and the power of this strategy. Now, when we're talking about life insurance, it's very important that we take a step back and we say, okay, you need to set this up properly. The reason why you're on this page is you might believe in the right philosophy, but if you work with someone that's not setting this up properly for you, you're not gonna get the result that you actually want. So what I'm gonna do is I'm going to explain a very tough concept and try to break it down where every single person after watching this, you can have a better understanding and you'll know more about how life insurance works than most agents and financial advisors. I know that's a big promise, but I 100% believe that you're gonna know more. So what I'm gonna do is I'm gonna draw two lines. And this person, again, represents you, okay? Now let's say you want to go buy life insurance. Let's say you wanna buy $1 million worth of life insurance because at the end of the day, if something happens to you, you wanna make sure that your money will get paid so that you don't leave people a burden, right? Now, there's a minimum that you can pay for that and a maximum. Now, up until now, no one's talking about max funding life insurance. Everyone's living in this minimum game. Everyone's trying to get the cheapest amount of life insurance. When I first started at the bank, I had an app that when someone came in and they wanted to buy life insurance, I could shop for 50 different companies and get them the cheapest amount of insurance because at the end of the day, when we're just looking at this benefit, it's a commodity. And if someone can offer you something for cheaper, you'd be better off going there because at the end of the day, $1 million is $1 million. Okay? Now, this is called, the cheap stuff is called term. Okay? This is a temporary life insurance. And if you had to guess who determines the minimum amount of premium, in this example, we'll just say $1,000 to make it easy. $1,000 a year, who determines that amount? Well, it's the insurance company. Because the insurance company has what's called a unilateral contract. And this contract essentially means if you keep up your end of the bargain during this time period, we are on the hook for $1 million. And so they have this risk because they have to pay $1 million. So that's not a free, but term insurance and this temporary insurance barely ever pays out and tends to be a huge profit center for these insurance companies. So the minimum is determined by the insurance company. What if the maximum was instead of $1,000, let's say the maximum was $10,000. Now the first question is, why in the world would you want to pay $10,000 for something that you could get $1,000 for? That doesn't make any sense. The second thing is, who determines that maximum? Well, if you said the government, you are 100% right. The US government, believe it or not, cares about how much money you're putting in for the certain kind of death benefit, kind of that death benefit ratio as it relates to you as the person. And why does the government care? It's because there are a lot of tax benefits. There are a lot of tax benefits as it relates to your cash. And I'll just put, this represents all the benefits to your cash. Some of this is once your money is when set up and used properly, and I have to say that because you have to set it up and use it properly. But when it's set up and used properly, your money will grow the rest of your life tax-free. You'll be able to use it tax-free. You'll get to pass it on tax-free. Your money will be able to grow without losses. Your money will be able to grow without fees. Your money will be able to grow without worrying about people attacking it. And there's so many other benefits. If you watched the webinar or read my book, you see that there's so many benefits to the ideal place to put your money or ideal investment. And all I would do is look and compare, and life insurance, when set up and used properly, takes care of every single one of them but the deduction. Just like a Roth IRA, you don't get to deduct your money. So the reason you would want to max fund is you care about all these cash benefits. So the secret here is, how do you get this max funded to a place where you're paying the least amount of insurance and putting the most amount of money in? Okay, I'll say that again. We want to reverse engineer this. We want to do the exact opposite than what I was taught when I first worked at the bank. We want to max fund and get the least amount of insurance possible. So we want to draw an arrow down below, and this arrow means max funded. And when this is set up properly, it is the greatest place to store and use your cash. And in the next video, I'm gonna actually show you one company. I'm gonna show you one company, the same amount of premium going in, and depending on how we design it, is how it performs. And I think it's gonna be mind-blowing when you see the numbers and how they actually work. Hey, it's Caleb Williams here. I want to thank you so much for taking time out of your busy day to watch our YouTube videos. We put a lot of time and energy into making them informational and helpful. I also want you to know that we do this for a living. So if you're an advisor, an agent, and want to learn more about the and asset and how to incorporate this into your life, check us out at theandasset.com. Also, if you're a consumer, if you're someone that wants to learn more about the and asset in your business or in your retirement plan or in your life and asking questions like, would this be beneficial to me? We want to help you. You can check us out at andasset.com. We have links down in the description where you can get the book, you can watch different videos and learn more. We just appreciate you. We appreciate if you give this video a like, give us a comment, and share this with people that need to see this content.